So, Alibaba has had a rough day. After that 5% drop leading up to its earnings report, and then reporting poor earnings with lowered earnings outlook, has led to an 11%, over 11% drop on the day, with a little more continuing after hours. So clearly, the inverse head and shoulders pattern has fallen through. It did not confirm the pattern, did not continue up, and it broke free. If you take a look at the chart, it actually landed right onto this support line here. It's hard to see it actually because of the support line. But since that is the case, there are two options going forward. Baba can either bounce off and try to retest this very stiff resistance, or break the support line and continue on a downtrend into this channel here. Now, I personally hope that it bounces off, breaks this resistance, and goes up all the way to at least 185. Because I'm ashamed to say that I jumped the gun. I said to myself that I would wait until earnings to buy in, but I FOMO'd with its little run up to earnings here and bought in at 160, not even like a good price, it was like $164. And I'm down over 500 on the day. That's why you should always wait for the confirmation. But it was only after this incident that I realized something. So a while back, when I watched Chicken Genius Singapore's videos, he made a video about investing in China, and he's been very vocal about not investing in China. However, there is one video where he says if he were to invest in China, he would invest in tencent. Now, at the time, I understood his reasons why he would do that, but I didn't really understand. At the time, I thought, okay, Tencent would be a good company to invest in, and it has government backing, government connections, but Alibaba is also a huge company, right? There's no way they can go defunct. And while that might still be true, I want you to ask yourself something. Who is the richest person in China? Is it the founder of Alibaba, Jack Ma? No, it's the founder of Tencent, So, something you have to understand is that in China, unlike in the Western world, and unlike in America, where businesses rely on their ingenuity and the strength of their founders to sustain the company, in China, what's more important are your backers, are your connections. They use a different business model, a fundamentally different business model, in which to succeed, you must have connections. Connections are more important than anything else. And Alibaba kind of breaks that mold. And you see that with Jack Ma speaking out against the party and being punished for it. I think he rose up without using as many connections as he should have, unlike Tencent, which is a fairly well-established company. And due to that, the foundation of Alibaba is not as stable as the foundation to Tencent. So another stock to take a look at is Huya. Huya, the streaming service, is also backed by Tencent. But then again, so is one of its large competitors, Douyu. And Huya, like all the other Chinese stocks, have been hit by the recent sell-off. I think they are in a slightly better situation than Alibaba, but they could be collateral damage. Right now, I am hoping really, that it bounces off this new line that I've drawn here. I hesitate to call it a support, but it does appear to be a light support line. Then, of course, Tencent is in a better situation. Well, better than Alibaba for sure, but it's in a it could go either way. If it breaks through, it could retest and continue up, or it can fall below and continue down along with Alibaba. Again, I hope that it does break through and continue up, but in this market with China's stocks and the whims of their government, it is hard to say how that will be reflected in investor sentiment. Well, I hope this has been at least a little bit helpful, and happy trading.